Investments in securities are subject to market risks. Read all related documents carefully before investing. Hello and welcome to the Weekend Investing Daily Bytes. We're shooting this episode on 22nd of May. So the market has taken cognizance of this RBI circular about this 2000 rupee note going away and has in a way said that this is no event for the market. Initial part of the uh, weekend, it looked like this is a surgical strike on black money, etc. And because of this, some of that money will come into the banking system, and there will be some friction in terms of how people will be able to, those who are hoarding it, will be able to convert. The last time this happened in 2016, of course, it was a different phenomena, but people paid 10, 15, 20% through various means to get their hoarding converted. As we've also seen in gold prices, people have paid almost 70,000 rupees per 10 grams when the going rate is 61,000 something. There are also newspaper reports that USD INR has traded above 90 rupees in cash dealings. People have been paying off, shopkeepers with 2000 rupee notes, whoever are willing to accept it, or on delivery, etc. But with the clarification that anybody will be able to change as many 2000 rupee notes as possible, all that fear will go away. I don't know why they have allowed a free change of this kind, but nevertheless, whatever is the RBI and the government intention in this. Uh, so this positive impact that we were thinking that Bank Nifty and markets in general would really welcome this as a sort of a money coming into the system. So 3.5 lakh crores which were out virtually out of the system, even if 20% of that money came in, it would have been like a 70,000 crore mini stimulus to the economy and formalization of that money. But that is not happening because of the reasons I just mentioned. So anyhow, so market has termed it as a no event, non-event, and has moved forward. Nifty has moved up almost 100 points today. So Nifty has done actually well on the back of, but this is not on the back of Bank Nifty or this 2000 rupee note issue. This is on the back of steel prices going up, or the expectation of the same, and the expectation that USD INR is going to make some new records, and IT sector is following that lead and going up. So you can see on the heat map a lot of IT stocks doing really well. TCS also winning a very large order from BSNL. Wipro up, Tech Mahindra, HCL Tech, Infosys, everything was up on the IT side. And these are just the top IT names. But if you go look at the mid cap and small cap IT, there are many stocks like Cyient, like Datamatics, several of them, which are doing really well since many weeks. Um, the other positive sentiment was in Adani stocks, where Adani Enterprise, which is a part of the Nifty, was up 19%. So a huge gain there. And some pharma stocks were moving up. Sun Pharma, Divi's Lab, despite the poor performance, maybe it was better than what was expected. And as you can see, the banking sector has been totally dull today, totally dull. Autos have been dull, and some pickup has come in steel and cement stocks. So as I mentioned, in terms of the sectors, you can see this first column is the daily sectoral change. Then the next column is 1 week change, then 1 month, 3 months, and 12 months. So we have this table updated on a daily basis. So you can see here that the top two sectors were metals and IT, and pharma, commodity, energy, and infra also, along with real estate, were up say 0.7% or more. And banking, especially private banking, was the one which was sulking the most at minus 0.3%. PSU banks were also up 0.5%. So banking has not really led the market today, but metals and IT have done so. Over the last week, again, metals and IT are now the only gaining sectors. Rest are all in the red. But over the last 1 month, I think most of the sectors are up except pharma. So, in terms of if we just look at the Nifty situation, so we are once again just, maybe 0.5% away from a recent highest close, and 18,800 is again, just 3% away. So, this support now that the market has taken, which was also the support here and pivotal point, will be a very crucial support going forward. So this now becomes the benchmark for future moves. And I think once we are able to take this high out, another shot at the all-time high should happen. And if in case this does, turn back and starts to slide and breaks this one down, then of course we are headed towards 17,600 odd. So this is crucial support, but it seems like from the optics that this chart looks very bullish. Uh, the same cannot be said about Bank Nifty though at this point of time, although it is at very very near to its all-time highs also. So mid cap, this is the Nifty mid cap 100 index. You can see here it has made a very nice long-legged uh, hammer-like pattern and it started to move up from here. In fact, it is almost at a recent all-time highs, so no issues with that. Small cap 250 index is also, which had taken support at the trend line, also moving up, closed at virtually at near recent highs. Bank Nifty has been dull, but Bank Nifty already is near the all-time high. So just one day and it can just zoom 1,000 points or 500 points in a single session. It is just brewing here to possibly go higher. This is the main reason why IT stocks are also looking buoyant, and pharma also. Uh, USD INR has moved from 81.60 to 82.80 and is again now approaching a very crucial resistance level at 83 many times, where the RBI has stepped in and prevented a further fall. But let's see how things pan out this time. This will be the fourth or the fifth attempt at 83 rupees in the last 6 or 7 months. And if a particular level keeps getting knocked at over a period of time, it does give away mostly. And once we do, cross this, I think the momentum will take it to 85, 86. Chart of the day. Some people said that please do a chart of the day. So I want to highlight CG Power as a chart of the day. And we want to draw lessons from, such charts. So this stock, if you see in the last, this is a 15-year chart, in the last 15 years, barring the last 2 years, so 13 years, the stock has been volatile between 20 rupees and 120 rupees. So, listing probably somewhere 40, then to 80, then back to 20, then went to 120, then back to 25, then to 80, then back to 40, then 100, then almost 5 or 10 rupees by COVID lows. Just imagine, if you did not have this portion of the chart, this portion, if it was not visible to you, I mean, what would you say? This is a chart, this is a stock that, has just frustrated whoever was in it, unless they were able to ride these short-term trends here. So what would have happened is that, the minute it crossed 120, which was its 15-year high, a lot of people who were stuck from pre-COVID or from 2011 in the stock would have gotten out, because when a stock has a 13-year history of going nowhere, it people are people anchor themselves to their buying price, although it makes no difference to the stock what your buying price is. But this is where most people would have gotten out. And from 120 it has moved very very quickly to 353. So this entire move from 510 rupees to 353, almost a 35x move in the last couple of years, most people would have missed it who are long term investors in here. If they had very strong conviction, only then they would have been able to hold it. Or if you were doing some structured way of investing, like a momentum investing, where maybe somewhere around 100 you would have caught it, and were riding high. Or if you are having a very short term momentum strategy, it would have even picked maybe near 20, 30, 40 rupees, and have some ride, maybe gotten off, then gotten on again, so on and so forth. So what lessons you can draw here is, depending upon your style of investing, you could come across many such stocks where it may take decades for them to really do what they were supposed to do, and your patience may run out faster than that. So uh, st- it all depends upon what is your psychology. I come from the school of thought where uh, if a stock is making a lot of pain for me and is giving me stress, I don't want it. I would rather have easier methods of even if I'm making a few percentage less than the marquee investors. I would rather have that confidence that my system can generate good returns when the market has momentum, and it will prevent or it will prevent disasters from happening in the portfolio, when stocks go from 100 to 5 rupees, for instance, here. So you have the protection on the downside, yet you know that your capital will get very nicely optimally used when the need is there, and will not be used in it for no reason at all. So let's now also cover this. Sorry, I'm so sorry. Let me just uh, go back here. So the topic for the day is power of step up SIPs. It's a very known subject. You possibly already know most about this, but a lot of new investors don't realize the power of compounding, and some numbers are usually required to really get that message through. So let's assume we have a strategy which yields 12% XIRR. So let's assume, maybe Nifty, we are investing in Nifty, and let's say Nifty over a long period of time, 25 years, generates a steady 12% return. So it's a lot of assumptions, but let's assume this. So if you do a 5,000 rupee SIP, for 5 years you make 4 lakhs, 10 years you make 11 lakhs, 25 years you make 85 lakhs. If your SIP amount is higher, 10,000 rupees SIP, in 25 years you make 1.7 crores. If you have 15,000 rupees SIP, you make 2.5 crores. If you have 50,000 rupees SIP, then you potentially can make 85 crores, and different combinations of various years, so on and so forth. This is all, it that at an XIRR of 12% over this period of time, if your annual SIP is so much, you will make this much amount. So, but a lot of times what is happening is that one is discipline. So most people will not have the discipline to continue their SIP. So that is something that you really need to work on. If you are taking a strategy for 20 years, 25 years, 10 years, 15 years, then you cannot after 2.5 years say that, oh, I don't think the market will do well. Then that is that's a self-defeating purpose anyhow. So the idea is that somehow you've trained yourself in your mind that you will continue the SIP. You know that as your SIP amount is going up, you will be making a ton of money at the end of the period. But the important part to see here is the compounding. So 5,000 rupees SIP is yielding you 85 lakhs, uh, uh, 8.5 crores, I'm sorry, and 50,000 SIP is yielding you 85 crores here. Uh, Now, let's assume the same thing, but with a 10% year on year step up. Again, these are all Excel based straight calculations. Life is not so simple and straightforward, but we have to somehow model it and create some benchmark as to how this can work. The idea here to what you want to see here is that as you are growing in your profession, I mean, maybe you have a job, maybe you're doing some business, uh, maybe you'll have a partner after marriage who will also contribute towards the family savings. uh, so to assume that your SIP amount will remain same is extremely incorrect. So if you were to assume that the growth in the economy is, let's say, 12-13%, uh, you most likely will be able to keep your wages somewhere near maybe 10%. So your savings rate is also increasing as you are going ahead in your life, in your professional life. So if we were to assume that you are able to do a 10% step up, then a 5,000 rupee monthly SIP, which yielded 8 crores 51 lakhs, uh, uh, I'm sorry, 85 lakhs in 25 years, uh, would yield you 141% more at uh, 2 crores 5 lakhs. So 85 lakhs. Yeah, I should have made put commas here. It's difficult to read these. So just by, let me not say just, if we increase by 10% every year, the monthly SIP amount, so 5,000 rupees for first 12 months, but then you have 5,500 in the next 12 months, and then you have 6,000 whatever, 50 in the one after that. So what is happening is that it's a very small incremental uh, change, but the compounding impact is huge. So even in 5 years, a 50,000 rupee monthly SIP, which was supposed to give you 40 lakhs at the end of 5 years, gives you 50 lakhs, 59,000, 25% more if you are able to do a 10% hike every year. Over 10 years, it gives you 52% more. Over 15 years, it gives you 82% more, 111, 141% more. So the compounding impact of that 10% step up is actually huge. And it's very difficult to fathom this or get a feel for this. This is just pure numbers that you will need to continuously pump in into your system, whichever one you're following. If you are doing some small cases, if you're investing in some mutual funds, so on and so forth. So what is happening is that gradually your compounding can improve and make that huge difference in the compounding due to the stepping up of the SIP. So stepping up value of your SIP can have unimaginable impact over the long term. Uh, of course, over a very short term, it won't have that much impact. So you could choose whatever is comfortable in terms of your saving. If you are able to improve your saving rate, then maybe 5%, 7%, 10%, or whichever way you would think that you will be able to continue the step up. And also, this may help you in keeping your lifestyle inflation in check. So if you are a compulsive spender, then you set aside money for the market. You sent your SIPs, you put your money away with your hike, and then of course the leftover is what you will use in your daily expense. So while there is open debate about this, living in the moment versus having goals and saving for the future, I think a good balance between the two is what you should look at. But appreciate the power of compounding is what the message that I want to go across here. So thank you so much for watching this episode. I hope you liked the content, and we'll see you in the next one. Bye.